an officer called the liquidator, he will be appointed by the court and he will be taking care of the affairs of the company. If the company has acted against the interest of the sovereignty and integrity of India, the security of the state, friend relation with foreign states, public order, decency or morality. Whatever work the liquidator is doing, he has to submit the cash book to the tribunal. Hello everyone, I am Purnima, faculty in the Department of Commerce and Management, Vidhyaashram First Grade College Temple of Excellence, MYSURU. I welcome you all to this session. In this session 1 of Unit 4, we will be talking about liquidation of companies. So, liquidators' final statement of account. Now, let us see what is this liquidator's final statement of account. The liquidation of a company is a process by which the dissolution of a company is brought about and its property administered for the benefit of its creditors and members. So, we should understand what is the meaning of the word liquidation. So, liquidation of a company is a process by which the dissolution of a company is brought about. Dissolution means you are dissolving the company or you are disintegrating the company and its property administered. So, whatever property is held by the company, that will be sold for the benefit of its creditors and members. And it will be used to pay off the creditors and members. An officer called liquidator is appointed and he takes over the administration of the company. So, an officer called the liquidator, he will be appointed by the court and he will be taking care of the affairs of the company. He takes over the control of the company, collects its assets, pays its liabilities and finally distributes the surplus among its members in accordance with their rights. So, the liquidator is a person who will be taking a control over the company. So, once the company has decided to liquidate itself or it has decided to wind up, then the court will appoint a liquidator. So, it will be the liquidator's duty to take control of the company. So, he will take charge of all the assets, he will sell off the assets, pay off the liabilities, and if there is any surplus, it will be his duty to distribute it among the shareholders. Then, the liquidation or winding up ultimately leads to the dissolution of the company. In between winding up and dissolution, the legal entity of the company remains and it can be sued in a court of law. So, in this liquidation and dissolution, the legal entity will still be there. So, what is the legal entity of a company? So, the company is an artificial person existing only in the eyes of law. So, this company, it will be working with the help of its board of directors. So, the company will be a legal entity until it is wound up. So, the legal entity remains and it can be still sued in the court of law. On liquidation, the powers of the board of directors will cease and will vest with the liquidator. Now, once the court takes a decision that the company has to be liquidated, then the topmost level, they will not have any power over the company. So, all the powers will be handed over to the liquidator. So, the members of the company will be known as the contributories. So, the members means it refers to the shareholders. The shareholders of the company, they will be called as the contributories to the company. So, the liquidator of the company will collect and realize its assets and distribute the proceeds among the right claimants as per the procedure of law. So, whatever the assets he has collected, he will just sell off the assets and then pay off all the liabilities of the company. The company's life will come to an end and it will be no more an artificial person in the eyes of law. So, once the entire company is handed over to the liquidator, then he will take care of all the assets and he will take care of all the liabilities and the company's existence will come to an end. So, the artificial person which is created by law, it will not have a legal existence. So, the liquidator is entitled to get remuneration as directed by the court or as fixed in the general meeting, as the case may be. So for all the services, whatever the liquidator is doing, he will be getting a remuneration. Now, what are the various modes of winding up? Now, what is the meaning of winding up? It means the closure of the company. You are shutting down the company. As per section 270 of chapter 20 of the Companies Act, the winding up of the company may be either by the tribunal or it is voluntary. Now, let us understand the meaning of the words tribunal and voluntary. Now, what is this winding up by the tribunal? So, winding up by the tribunal is known as compulsory winding up. So, you are compulsorily shutting down the company. So, according to the Companies Act, it may order for the compulsory winding up on a petition under section 272. So, on a petition under section 272, this winding up can be done. So, what is the petition? If the company is unable to pay its debts, suppose the company is running into huge debts, then if it is not able to pay its debts, then the creditors can approach the tribunal and ask for a closure of the company. If the company has by special resolution resolved that the company be wound up by the tribunal. So the company, in the special resolution, it says that the tribunal can wind up, then it can wind up. If the company has acted against the interest of the sovereignty and integrity of India, the security of the state, friendly relation with foreign states, public order, decency or morality. So if the company has gone against the norms of India, it is acted against the interest of the nation, that is, it is the interest of the sovereignty and integrity of India. So if the company is not in favor of India, or if it is that threatening the security of India or the friendly relations with the foreign states, so all these things, if anybody is filing a petition on these grounds, then the company can be wound up. Then, if the tribunal has ordered the winding up under chapter 11, if on an application made by the registrar authorized by the central government, the tribunal is of the opinion that the affairs of the company have been conducted in a fraudulent manner, or the company was formed for an unlawful purpose. Suppose the tribunal feels that the company is working in a fraudulent manner or it is doing some illegal business, then the persons concerned in the formation of its affairs have been guilty of fraud, misfeasance or misconduct, then it is proper that company be wound up. If they feel that the company is doing some illegal business, or if it is doing some fraudulent business, or if the top level management, they are guilty of cheating, fraudulent means, etc., then in that case the company can be wound up. So if the company has made a default in filing with the registrar its financial statements or annual returns immediately preceding the 5 consecutive financial years. Suppose, see, every company has to file its financial statements with the registrar. So every year it has to file the returns. Suppose there is any fraudulent statements which it has filed within the last 5 consecutive years, then that can be a reason for closure of the company. If the tribunal is of the opinion that it is just and equitable that the company should be wound up, so the tribunal feels that it will be better for the interest of all the stakeholders of the company that the company should be wound up, then the company has to wind up by the tribunal. Then the next one is voluntary winding up. Now, what is this voluntary winding up? If the company in a general meeting passes a resolution requiring the company to be wound up voluntarily as a result of the expiry period for its duration, if any, fixed by its articles on the occurrence of an event in respect of which the articles provide that the company should be resolved. So, if the articles of association, so we all know that it is one of the most important documents of the company. So, we have the memorandum of association and the articles of association. So, these two documents are most essential for registration of the company. If the articles of association says that after the expiry of the fixed period, the company has to be wound up, then the company can go for voluntary winding up. Or if the company passes a special resolution that it should be wound up voluntarily, then also the company can voluntarily wind up. Then next we have the liquidator's final statement of account. So the main job of the liquidator is to collect the assets of the company, realize and distribute the money realized among the right claimants. So it is the duty of the liquidator to collect all the assets, then sell it, and then whatever money he is getting, he will be paying off to the creditors, and if anything remains, it will be distributed among the shareholders. So in order to record all cash payments and returns, the liquidator maintains a cash book. So the liquidator's final statement of account, it is nothing but it is a cash book maintained by the liquidator. So he will be maintaining the cash book of the liquidation, and he has to submit an extract of the cash book to the tribunal in case of compulsory winding up and in case of voluntary winding up. So whatever work the liquidator is doing, he has to submit the cash book to the tribunal. Then in the event of the affairs of the company finally wound up, he has to submit a final statement. So such statement is the liquidator's final statement of account. So after doing all the process of liquidation, so he will be submitting the cash book to the tribunal, and then he will prepare a liquidator's final statement of account, and such statement we call it as the liquidator's statement of account. Then so the order of payment of liquidation. The liquidator's task is to realize the assets, disburse the amounts. The following is the order in which the disbursement must be made. So the first you will pay off the secured creditors. Now who are the secured creditors? These are the creditors whose loan is secured by an asset of the company. Suppose there is a creditor, he has paid the money amount received has been utilized to buy a building. So this amount is secured by the building. So if the company has to sell the building, so as soon as the company sells the building, the amount realized first it should get paid to these creditors who are secured by the building. So they are secured creditors. So they will be having a lien on any of the assets of the company. So such creditors, we call them as the secured creditors. Then second one is the legal charges. Now what are the legal charges? All legal expenses relating to the sale of assets, they all come under the legal charges. Then liquidator's remuneration. So this is the amount payable to the liquidator. So it may be the percentage on asset realized, percentage on amount paid to preferential creditors, percentage on amount paid to unsecured creditors, percentage on amount paid to the shareholders. Then we also have the liquidation expenses. Now what are the liquidation expenses? So whatever expenses it has been incurred by the liquidator relating to the sale of asset. So he has put an ad in the newspaper relating to the sale of asset. The advertisement charges, that we call it as the liquidation expenses. Then payment to debenture holders or other creditors. Now who are the debenture holders? They represent the loan capital of the company. So if you are buying a debenture, you will be a creditor to the company. If you are buying a share, you will be the owner of the company. So the debenture holders, they are giving the money in the form of a loan to the company. So whatever the debenture is there, the amount of debentures in the company, so that has to be paid. Then next we have the preferential creditors. So any amount due to the employees and the government, they come under the preferential creditors. Then unsecured creditors, they don't have any charge on the assets of the company. Then we have the preference shareholders. Then lastly, we have the equity shareholders. So this is the order of payment of liquidation in case of winding up of the company. Next, the order of payment. The various claims will be satisfied by the liquidator in the order mentioned above. So, if the money available with the liquidator is exhausted after paying the preferential creditors, payment cannot be made to unsecured creditors and anybody else coming after preferential creditors. Now, so if we are having here preferential creditors unsecured. So, if the money is not sufficient, so after paying the debenture holders, there is no money left. So, they are paying to the preferential creditors, then after that there is no money. So, then these three people, they will not get any money. So, that is how it is. So, after paying, the liquidator's final statement is, although presented in the form of an account, no double entry involved. It is really a summary of the cash book after the start of liquidation. Keeping in view the statutory requirements, the form of liquidator's final statement is given below. So, we have the format here. So, the order of payment of liquidation. So, this is the actual format of the liquidator's final statement of account. So, on the debit side, we have the cash or bank, assets realized, surplus from secured creditors. Then we have the contributories. On the credit side, we have the secured creditors, legal charges, liquidators remuneration, liquidation expenses, debenture holders, preferential creditors, unsecured creditors, preference shareholders, equity shareholders. So, this is the order of payment. So, in this order only, the liquidator has to make the payment to the various creditors of the company. Then, on the receipt side, we have the cash or bank balance. So, what is this cash or bank balance? So, it should be shown as the first item on the receipt side. So, on the receipt side, we have the cash or the bank balance. So, whatever money is shown in the balance sheet, that should be mentioned here. Then next, we have the assets realized. So, amount realized on sale of other assets shown here. So, even in case of a sale of a secured asset, the gross sale proceeds should be included in this item. So, asset realized, whatever the assets you have sold, that you have to write. Surplus from secured creditors. So, in case secured creditors themselves sell all the liabilities, they will pay the liquidator any surplus after meeting their claims. Now, if the secured creditor's value is 50,000 and he has sold the asset for 60,000, so what is his liability? His liabilities was only up to 50,000. So, this 10,000 extra which he has got from the asset, so that will be called as the surplus. So, this should be handed over to the liquidator. Only the surplus is shown as a receipt. So, whatever is the surplus, that will be shown as a receipt. Then, contributories. Now, who are the contributories? The present and former shareholders are called the contributories. So, whoever the present shareholders or the former shareholders, they are called as the contributories. So, as per the provisions, every person who has been a member shall be liable to contribute the assets of the company an amount sufficient for payment of debts and liabilities and costs and expenses of winding up. So, any person who is a shareholder of the company, it is his duty to pay up any debts which is due to the company. If there is any call unpaid, then it is his duty to pay the call money to the company. So, it is every person liable to the assets of the company in the event of winding up. All persons who are shareholders are placed in the A list of contributories. All persons who cease to be shareholders within a year of date of winding up, they are the B list of contributories. Now, in this we have the A list and the B list. So, they are the present shareholders and these are the previous shareholders. So, such former members are not liable to contribute for debts incurred after they cease to be the members. Now, these people, they don't have to pay for any of the debts. Only the present shareholders have to pay. They will not be liable if the creditors cannot be paid out of the monies realized from the assets or from the shareholders who are members at the time of winding up. There will be no liability to pay anything if the present shareholders have paid the amount due on shares. So, whatever is the amount due. So, if there are 1,000 shares of rupees 100 each, so 1,000 shares into 100. So whatever is the amount, so that entire amount should be paid by the shareholders. If they have already paid all the share money, then they need not have to pay anything on the case of winding up. Then next is problem 1. So we have a problem here. MN Limited went into liquidation with the following liabilities. Secured creditors 40,000, securities realized 50,000. So this is the loan which is being lent by the creditors to the company. This is the value of the assets realized. So if you can see here, there is a surplus of 10,000. So surplus of 10,000 is there. Then next we have the preferential creditors, unsecured creditors, liquidation expenses. The liquidator is entitled to a remuneration of 3% on amount realized, including secured assets, and 1.5% on amount distributed to unsecured creditors. Now, if you can see here, the liquidator's remuneration 3% of 1,02,000. Now, what is this 1,02,000? So, 52,000 plus 50,000. So, 50,000 is the including the secured assets. So, totally when we add, you get 1,02,000. On that 3%, it is 3,060. Then 1,200 on preferential creditors. So, on payment made to preferential creditors, you are getting 1.5%. So, that comes up to 18 rupees. Then unsecured creditors. So, whatever is the money remaining that you will be paying to the unsecured creditors. So, 1.5% of 56, it comes up to 846. So, this is the total. So, you are paying, what is the value of unsecured creditors? The value of unsecured creditors is 61,000. But how much you are paying? You are paying only 56,376. So, whatever money, so the liquidator had 62,000 with him. So, with that, he has adjusted all the creditors. Now, if you can see here, there are no contributories and there are also the liquidation expenses. So, liquidation expenses is 500. So, preferential creditors, we are paying 1,200. So, the rest of the money, 56,376, we have paid to the unsecured creditors. Total is 62,000. Then, now how do we calculate the liquidator's remuneration? So, 3% on asset realized. So, 52,000 plus 50,000, 1,02,000 into 3%, it comes up to 3,060. 1.5% on preferential creditors. So, 1,200 into 1.5%. So, that is 18 rupees. So, 1.5% on unsecured creditors. So, that will be equal to 62,000 minus 4,478 into 57. So, this, how do we get this? 57,222. So, that we have to see here. If you can see here, if you can just add all these expenses. So, 3,060 plus 18 plus 846 plus 1,200 plus this 500. So, when you add all this, you get 4,778. From that you minus, so 57,222 you get, and on this, this amount is inclusive of the liquidator's remuneration. So, into 1.5 divided by 105. So, you have to add 1.5 plus 100. So, that will be 101.5. So, when you add all this, you get 846. Now, from this 846, so 57,222 minus 846, the remaining amount, so that will be 56,376. So, this is the amount being paid to the unsecured creditors. So, first you find out the remuneration, because this amount 57,222, it is inclusive of the liquidator's remuneration. So, first thing is you add the percentage with the percentage plus 100, you get 105. Then you calculate the liquidator's remuneration first, and from that you deduct the total amount available. So, you get the amount which is due to the unsecured creditors. So, this is how we have to work out the problem. Now, we have one more problem here. Vishal Limited went into liquidation. The following was his position. So, they are giving a remuneration of 2% on amount realized and 2% on amount distributed to unsecured creditors other than preferential. So, we have the preferential creditors 10,000, unsecured creditors 31,000, debentures 10,000, asset realized 39,650, liquidation expenses 1,000. So, these are the details given here. Now, cash at bank is nil. Asset realized is 39,650. Now, secured creditors also is nil. Now, the liquidator's remuneration on amount realized 2%. So, 793. And then what they are told? 2% on amount distributed to unsecured creditors other than preferential. So, if there is any remuneration which is paid to the liquidator on unsecured creditors, and if they mention that it is other than preferential, then you can safely calculate the amount paid to unsecured creditors. On that, you can calculate the percentage. But if the problem is silent, if they say that he is entitled to amount distributed to unsecured creditors, then you have to include preferential creditors also for calculation of percentage. So, directly on the liquidation expenses is 1,000, preferential creditors 10,000. So, unsecured creditors. Now, what is the value of unsecured creditors? 31,000. So, this 31,000. So, what is the amount available? We will see here. Calculation of liquidators remuneration. So, this is 2% on 793. Amount paid to unsecured creditors 27,311 minus 546. Now, how we get this amount? So, if you can see here, we add all this amount. So, 793 plus 546. 793 plus 546 plus 1,000 plus 10,000. From that, you deduct 39,650. You are getting the amount as 27,311. So, 27,311 into 2 divided by 102. You are getting 546. Now, 27,311 minus 546. So, you will be, this will be the 27,311 will be the amount paid to the unsecured creditors. So, next you don't have any payment to the preference or the equity shareholders. It is nil. So, with this, we come to the end of this session. Hope you have all followed it. Thank you.